Right. Good morning. Thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let me just set this. Yep, I think we're good to go. It promises to be an interesting day of trade simply because viewers, I think all of us are now realizing that even overnight trades, as short as they are for 48 hours, are proving to be indecisive and not necessarily profitable as we've seen in the last few days because the news are changing. If it was very bleak yesterday, it's not so bleak today. So amongst the key news, Joe Biden plans Europe visit next week for talks with the NATO allies. On the geopolitical front, that is one. Oil has cracked more and is now over 25% below its recent highs. It's now in two figures from being at 130 and promises of going to 185 or 150. It is now 99. Just shows the extreme volatility out there. I think the war is in focus, yes, but the China demand is also in focus simply because China is undergoing a serious lockdown scenario in a lot of provinces, and that brings into question the demand for oil. Rate setters in India, of course, say that India inflation outlook is overtaken by the war. And I think one of the external members of the APC mentioned that maybe, just maybe, India might need to revise the inflation projections and rate trajectory conversation in the April meeting. So that could be interesting as well from an India perspective. But what about markets? US markets did okay. The NASDAQ slipped into bear territory and then bounced back 3% up in trade yesterday. Really strong show by the US markets. So that is a bit of a positive cue. By the way, just in between these markets, I want to slip in a chart which shows how, if you really believe in buy and hold for the long term, it depends, seriously depends on which asset class, and most of the asset classes haven't been quite convincing. There's a chart which shows how the Chinese A shares market, look at that. This is the index, MSCI China gross index performance in USD terms. And if you held it from March 92 onwards until now, look at that. It is almost come back to being negligible in terms of returns, USD terms, of course. That's quite a stunning thing. So you've got to question your buy and hold strategy in all times. It worked for Warren Buffett really well, and he knew some of the companies well. I do have an issue with this argument because when people berate buy and hold, they berate buy and hold for all asset classes. I think for indices it could well hold true. For a lot of companies, it doesn't necessarily hold true. So pick and choose. That's the limited point I wanted to make. But the markets, getting back to markets, Asia should be doing okay, and SGX Nifty should be showing some bit of an uptick. So I presume that quite unlike the cuts that we had yesterday, in today's session, we'll have a bit of an uptick for sure. Let's see if this lasts. Now, the key thing, viewers, is the is how big and how important a day it is today. Now, keep in mind, I think that today there are two key events which will make sure that the markets don't have a really strong run. So the FOMC decision and commentary thereof, which would lead me to believe that it'll be very unlikely that the European markets, no, the FOMC decision and commentary and the bond payment due date. I think there is a data point about both of those, and we should try and bring that up because both the FOMC decision and commentary as well as the bond payments from Russia, which could actually kickstart the first foreign currency default for Russia since the 1917 move that happened. Now, these are the key things to be watched today, and as a result of which, somehow it might be very unlikely for the world markets to have a really meaningful move. So that's the point. That's the trade setup for today. That it's very unlikely that global markets will stage a large rally ahead of the FOMC decision as well as this particular piece. I think 16,500 to 16,470, as per what most notes that I read said, will be a key support, with 16,900 or that zone essentially being a key resistance zone. And frankly, if you're looking for trades, then everything that benefits from commodity correction could probably be the best intraday bets. I mentioned intraday specifically simply because it might be risky to take overnight positions because you do not know what the Fed commentary could be like and what impact does it have on global markets. So play safe. Maybe your trade is right if you carry overnight, but do you want to take that risk? That's the key thing. The other point to ponder is this view given by JP Morgan, which says that equity inflows world over could actually be about $230 billion in the coming weeks as funds rebalance their portfolios. It's a very long note. I've gotten you the summation of what JP Morgan is trying to say. And the reason why this is important is because if I mean, 230 billion is not large from a global equities perspective. Can some of that find its way into India? Remains to be seen. Maybe India domestic equity flows could be very large too. I think mutual fund industry people are talking about how, because of tax saving funds, maybe multi-cap funds, the inflows into equity funds for the month of March could be very large, and that could be supportive for equities as well. So keep all of that in mind. We've had a one-way route in terms of outflows from the FI side. Could there be some rebalancing for India as well? Remains to be seen. Somehow seems difficult, but you never know. Some stocks to watch, not too many today, but I'm getting you some of the key ones. So PNB, they've reported a fraud of 2,060 crores in an NP account of an ILFS Tamil Nadu power company at a corporate branch in Delhi. They have accounted, or provisions have been made for about 824 crores worth of this amount, but 2,060 crores is a large one, and therefore it is something that everybody should be watching out for. Does it have an impact on PNB? Maybe it does. Let's wait and watch. The market is good today, so maybe negative news not really that impactful. The other one is Zomato. I don't know how the market's taking this. They have approved a grant of a loan of about $150 million to Growforce to support the capital requirements. Interesting. They're also mulling an all-stock takeover deal for the Blinkit Bloomberg, for Blinkit. This is as per what Bloomberg is reporting. So does it have an impact? Again, remains to be seen whether this will be having a positive impact on a negative impact on Zomato. Excuse me for that. So let's wait and watch if that transpires. There's a lot of brouhaha around 197 Communications and PB FinTech, wherein the Softbank representative has resigned. I doubt really it has a material impact. This is all decided beforehand. So let's wait and watch if any of these stocks, either of these stocks also have some bit of an impact or no. By the way, keep in mind, viewers, today, because NASDAQ has bounced back so strongly, the likes of Zomato or PB FinTech or any of these platform companies could actually have a good day. Speaking of good days, because crude has corrected, all the crude beneficiaries also could have a good day. So you got to keep in mind. Let's wait and watch what happens there. So airlines, autos, paint companies, some of the chemical companies, all of them remain in focus. There's some consistent promoter buying that I've read every day in bulk deals into some of these names, and that's why I'm bringing them to you. So Maharashtra Seamless, wherein the promoter group Sudha Apparels has bought another 3.115 lakh shares between March 11 to March 14th, or Weber Global, wherein promoter group Brett Enterprises keeps on buying shares every second day. So that's something I'll watch out for. Or for that matter, GNA Axles, wherein both promoters Ranveer Singh and Gurdeep Singh have bought small shares, about 9,000 shares each, but they've bought. So maybe watch out for some of these names. Watch out for Hatsun Agro. Malabar India, which is Sumit Nagar's fund, has been a big votary of how well Hatsun Agro can do, but they've sold or paired some of their stake that they have, which has been bought by the promoter, by the way. Chandramohan RG is the promoter of Hatsun Agro. He's bought those shares which were sold by Malabar Value Fund. Interesting transaction. Did Malabar want to chip off some of its holdings, and that's why this has happened? Remains to be seen. Sumit Nagar is a very smart money manager. If he exits stocks, typically, at least the small cap names and the mid cap names, markets don't like it. Let's see, maybe this is just a small pairing of stake. So hopefully not a really big deal. So keep that at the back of your mind. That aside, there's some arguments against real estate stocks. I've been a big votary of how things seem to be aligning. Now I've heard contra views, and therefore I thought I should bring them to you. The rising cost of construction because of the steel cement price upticks and a potential rising interest rate scenario in India impacts real estate sentiment directly. And those could be things that could go against. By the way, keep in mind, while I'm telling you things which could go against real estate sector, both UBS and Morgan Stanley have come out with fairly optimistic notes on real estate companies, and particularly the Mumbai-based ones. So do keep that at the back of your mind. There's also some argument happening about how people should be constructive on cement. I thought the Jefferies view on Ambuja cement particularly was interesting because they bring arguments which might not be constructive for cement as a space. So they were buy with a target price of 360, but the two arguments are interesting. They are saying that Ambuja is telling them that the medium-term outlook is strong, but the current trend is sluggish and costs are rallying, but the price uptick is not matching the cost trends. This is AMBUJA telling Jefferies. But if AMBUJA is facing that, I'm sure the rest of the cement sector also faces that. So that's a point to ponder as well. Last but not the least, while JP Morgan, some of the others are bullish, I think the fund manager survey by BOFA, the Global Fund Manager Survey, throws up some fairly interesting observations. They're saying, and I quote, that the Russia-Ukraine issue drives fund manager cash levels to the highest, and the global growth optimism is the lowest since July 2008, which is when Lehman happened. Can you imagine that the optimism around global growth has sunk to that kind of levels? The fund manager equity allocations are down, but not at capitulation levels. So maybe something more could happen. They are saying that the bull and bear indicator of BOFA is at 2.8, which is not at extreme bearish levels as yet. This is all on the global front, by the way. And they are saying that the positioning plus policy means that it is too early for a contrarian buy call. They remain tactically and cyclically bearish. This is BOFA, of course, not fund managers, but BOFA. So that's quite interesting, viewers, that there are people who are talking about some large inflows happening as positioning changing, but the overarching call from large global fund managers still seems that there is still some more time to go, and the quant indicators of BOFA seem to suggest that there is still some more pain on the global front. Now, if that is indeed true, then India certainly suffers from that pain as well. So let's wait and watch. Maybe markets stay range bound, maybe with a bit of a negative bias, but maybe, just maybe, some of the individual movers might still have some merit. That is what you need to find in order to make money in such a market. Stay away from large leverage trades. Stay away maybe in the near term from positional trades, and most certainly today, because of two key events. One which might be isolated to Russia, but might have impact. You know, I mean, I don't know, really, I'm not that smart. I don't think anybody is. But two, the FOMC decision and the commentary from Joe Biden and team, not Joe Biden and team, excuse me, Jerome Powell and team, might have a big impact on how equity markets behave tonight, and therefore what Indian markets might do tomorrow morning. So be careful about that as well. Of course, watch out for commentary from Joe Biden and team, because that has large repercussions with regards to Russia, Ukraine, and the sentiment on equities there. Stay safe. If you're stepping out, please stay masked up. And of course, as usual, we sign off by requesting everybody to urge a small prayer for all those involved in the front line of the conflict.